Hi there, this is Chris. This is your weekend trade, even though it is in fact Wednesday, November 3rd, 2010 at this point. But this is a short-term pattern, so I figured I might as well violate my own policy and hopefully make you a couple extra bucks. Alright, we're looking at WATG, Wonder Auto Technology. And actually, the last, take a look at the last automotive company I recommended, and hopefully we'll get the same or similar performance to that one. This was GPI. I did that video a while ago. I recommended to buy at 28, and now it's sitting over 36.11 in the matter of 4 weeks. But anyway, back to WAG, or WATG, and I'm looking at a short-term trade because I'm seeing a pattern form. This right here, I'm seeing a pennant, and a pennant, if you're familiar with your different shapes, kind of looks like this, just like a normal pennant. It's basically a flag, right? Or a type of flag that you would see flying somewhere. Now, when a stock makes a pattern similar to that, then we have a pennant, which is a short-term pattern, usually lasting 3 weeks or less, that signifies a sudden breakout of a previous trend line or resistance or pattern, and then it forms this, which is, as we see, a symmetrical triangle or a downward sloping triangle. That can work too. So if it was like this, if it was like that, that'd be fine too. And then, as it breaks out of that formation, the exact amount, the exact length of the previous jump, it will move up again. Also known as the common term from Wall Street traders, the flag always flies at half-mast. As we see, the flag itself always flies at half-mast. So, what are we doing here? I'm going to get rid of my drawings. First, I'll draw a couple trend lines, because that's what I do. I'm going to draw that one across there. That's a short term. There's another one. Another short term, kind of. And those are just for my own amusement. And here I'm going to finally draw the pennant formation. And I'm going to draw that in bright purple. The top of the pennant is right here. And it crosses through, and it already has broken out. Bear this in mind. The top of the pennant is there. The bottom of the pennant, I actually already drew through that trend line, but I'll draw it again. The bottom of the pennant is right here. And see if I can draw it correctly. Alright, so we have a small little triangle there. And then this right here, from here we see a breakthrough between that previous level starting at about $9, and we see a nearly vertical jump. And I say nearly vertical, so the most reliable formations are actually vertical, but I'll take this anyway as it is. So it jumps through this $9 resistance level and makes a nearly vertical jump up to roughly $10.50 before moving back down. So our measuring formula, our objective of the trade, will duplicate that same exact line that I just drew, stick it at the end of the formation, so at about 975, and our objective is going to be, I'll zoom out in a second, our objective is going to be around this level right here, which is around 1125. Objective 11 $4.25. And this is a short-term pattern, like I was saying, so I'd expect a profit within a matter of, let's see, this lasted barely 2 weeks, so I'd expect it to get there within 2 or 3 weeks, maybe 4 weeks. So what we're going to do then is we're going to enter our trade hopefully tomorrow, because it has broken out of this this formation. We're going to hopefully enter it tomorrow, since that is yesterday's close, and that's today's close, $10, and since then it's moved down to about $9.95 in after hours. I'll actually zoom in to see if I can actually get a superior price to jump in and get rid of my drawings. Alright, I'm going to get a 10-day chart, give us 30 minutes, and we're going to take a look to see if we can find a good resistance point to get in. Actually, 5 days, 30 minutes, there, that's better. Alright, so we want to find a good point to enter the trade. It seems like our last point of resistance was 990, and due to the price action that we had today, I'm guessing that it's going to somewhat go down tomorrow. So our first breaking point is going to be about 990. So that means if you're willing to take a little extra risk, get into the trade at 990. So that'd be an aggressive entry, since that seems to be the last support point. And I know I spelled aggressive wrong. Sorry. The next point, I would recommend buying in. Maybe 975 was the last support before 990, so I'd recommend getting in at around 977. So that would be a more conservative entry at 977. And that's just in case it never gets to 975. And of course, the risk with doing that more conservative entry, even though you might get a better entry price, it might never hit that level, because it has in fact broken out of the price level of the pennant formation. So it might never get there. So if tomorrow you see it going down to 990 and the broad market is going up, I'd buy there. Anyway, we're going to now go to our stop order. I'll get rid of these. We're going to set our stop order depending on how much risk we want to take. So I normally like to risk about 1% of my portfolio. So that usually determines my position size. But for this one, what looks like an impressive resistance barrier. If I get in at 990 and I risk 50 cents, that means I'm going to risk about 5 cents on the trade. So if it goes through this trade and it goes here, your conservative exit is going to be this resistance here. And this is in case your trade fails or my trade fails. Conservative stop point is if it closes below 965. Aggressive stop point is if it closes below 945. Closes beneath 945. Alright, so there's your choices. Assuming we're going to get in at 990, that means we're either risking 25 cents for our trade for each share that we buy, or we're going to be risking about 45 cents for each trade, and that's pretty good. That's about 5%. That's reasonable for an uptrending formation. And let's go to, once again, our objective. I already mentioned that because of the formation, we're going to, let's see, there's our top formation. Here's our bottom of the formation. and our flagpole or pennant pole. That's our measuring. I duplicate that, move that over here. I already mentioned that we're expecting it to get to 11.25. Let's just be safe. Set our order at $11. $11. So that means that if you buy in tomorrow, that means we're expecting a short term, roughly about 10% gain. Alright, 10%, maybe 9% gain within a week or two. I'll take it. Alright, thanks for watching. If you have any other questions, feel free to post in the comment box. Thanks for watching.